Hello, and thank you for joining us. Today, we're offering a behind-the-scenes look at our Dunham Investment Committee's allocation decisions for the fourth quarter of 2023. This quarter, our investment committee dove deep into some pressing issues. Various topics were discussed, but one subject loomed larger than the rest: the Federal Reserve's ongoing series of interest rate hikes over the last 18 months and its impact on the economy. This topic naturally steered the conversation toward discussing the potential of an approaching recession. By the end, the consensus leaned toward the likelihood of a mild to moderate recession. While the word recession may send a shiver down your spine, it's important to note that recessions are a normal part of the economic cycle. The trick is to be prepared and strategically positioned. So, what are we doing about it? We're making changes in our portfolio, like adding to investments that are more tactical in nature. In addition, the sentiment is that interest rates are peaking, and there is no surprise there, as the investment committee has felt since the beginning of this year that rates would peak by the end of 2023. This view has implications for duration risk in our fixed income strategies. It's something we have steadily been increasing all year, and it was not different this quarter as the investment committee continued to cautiously migrate assets to investments with interest rate sensitivity. With these allocation adjustments, rest assured that our long-term goals remain firmly in sight. It's a matter of balance, knowing where we are now, considering where we want to be in the future, and taking calculated steps in response. Let's take a look at the strategies to see the changes made for this quarter. Within the core U.S. equity allocation, we're reducing our investment in the Dunham Large Cap Value Fund and reallocating those assets mostly to the Dunham U.S. Enhanced Market Fund. This fund has the capability to adjust its equity exposure from 65% to 130%, offering us a more dynamic way to respond to market shifts. We believe this positions us well, given the current economic climate we previously discussed. We've also made adjustments to our growth funds to keep things balanced. In our core fixed income allocation, we've made some calculated changes to better position ourselves for the interest rate and credit environment we believe are ahead of us. First, we've scaled back on credit risk by reducing our allocation to the Dunham Floating Rate Bond Fund. We use this shift to increase duration risk by moving these assets into the Dunham Corporate Government Bond Fund. To counterbalance that higher duration, we've increased our stake in the Dunham Long Short Credit Fund, which historically has had very low duration risk. This shift also helped us offset the Dunham Monthly Distribution Fund's allocation decrease, a move spurred by a strong performance boost this quarter in the fund and some tightening deal spreads. So while these changes increase the portfolio's overall duration exposure, we're doing so in a measured way. It aligns well with our yield curve normalization insights, which suggests that it's wise to maintain a moderate duration as the yield curve normalizes. In the core alternatives allocation, we're making some calculated changes. Specifically, we're pulling back on the Dunham Real Estate Stock Fund and the Dunham Monthly Distribution Fund. We're reallocating those assets toward the Dunham Dynamic Macro Fund and the Dunham U.S. Enhanced Market Fund. Why? Well, the investment committee believes these more tactical funds are better equipped to navigate potential recessionary waters. And if it turns out we don't head into a recession or a very mild recession, we believe these funds offer us the flexibility we'll need. So, we're aiming for a balance that prepares us for various scenarios. In our core foreign equity allocation, we've scaled back the direct allocation to emerging markets. Keep in mind, though, that our international stock holdings also include some emerging market exposure. So rest assured, our overall position in emerging markets remains strong and well-diversified. In our core equity allocation, we've made some adjustments. First off, we're shifting the balance more towards U.S. equities as compared to foreign and global holdings. At the same time, we're also bumping up our exposure to alternatives. To make room for these changes, we've scaled back on the Dunham Large Cap Value Fund and the Dunham Emerging Markets Stock Fund. we reallocated those assets to the Dunham Dynamic Macro Fund and the Dunham US Enhanced Market Fund. In the core fixed light allocation, we've implemented minor adjustments to fine-tune the portfolio. And that wraps up our allocation update for this quarter. Remember, these decisions aren't made lightly. Every move is calculated, carefully weighed, and designed to position us for what we believe lies ahead, whether it is challenges or opportunities. Thank you for tuning into this edition of Dunham Behind the Scenes. Since we will not see you until the new year, please enjoy the upcoming holiday season.